All right, we are live. How's it going this morning? Bull market technicals. So we're looking at the technicals of the dollar right now. All right, the US dollar, as we've been saying this whole week, is a very bullish technical signal, right? Outside of just earnings. So earnings are obviously going to be the next big catalyst, right? But for the most part, we're checking out the dollar here because it is signaling a bull market, a secular bull market. It's just one variable. But we do see the S&P 500 really quick, just so we can look at the technical bull market, right? This is the bear market trend. Actually, let me zoom in here, right? So this is the bear market trend that we broke a long time ago, right? Back in March, when the banking crisis happened, and the S&P is slowly. I'm going to go to SPX. Actually, the S&P is slowly just grinding higher. The all-time high is here in gray, right? The all-time high is there in gray, and we're not that far from the all-time high. It's very bullish technical. The next stop is like 46. What do you got? 46. 4,600 is the next stop. That's our previous resistance zone. And this earning season is going to be very important to see if the underweight positioning starts to come in, or if they wait. So there's a lot of under positioning here, and S&P is testing the top of this trend. So we either get a big blow off top right into that 4,600, or we start trending back down. Now the next stop for S&P 500 would probably be pulling back into this range before it goes higher. So there's a lot of positive catalysts, right? Obviously, we may be bottoming in the earnings season, but for the most part, if you look closer in, right, the S&P just continues to make new highs. I think this morning we retested a new high. Going to the Qs, right? Looking at the Qs, we're basically blowing past this exponential trend. And what that means is, in the, sort of this trend that we have here, this channel, we're at the top of the channel. We haven't retested the bottom of this channel. We continue to grind higher because, like I've been saying, a lot of people are just off sides. The inflation numbers are coming in better than expected. And we did get retail sales this morning. We'll go over retail sales, by the way. We will go over retail sales. And I see you out there. We'll go over retail sales and kind of talk through why, how does that affect the market? Because right now, after retail sales came out, the bond market sort of dropped, right? Rates came down, and we're starting to see IWM, which are the small caps, right? The more interest rate sensitive names start to bid up. So this is NASDAQ, right? I think NASDAQ is showing us that it's going to start to slow down a little bit. We are consolidating in the morning. Let me see. What are we looking like in the morning? Let me pull this over so that I can see, and then I can give you guys a read on what we're seeing this morning. Hopefully we don't have no technical issues here, and then I'll get to your comments. All right, so this morning the advanced decline line is up. So a lot more stocks are advancing versus declining, right? A lot more stocks advancing versus declining. That's at 1,500. Okay, S&P is retesting the previous high at 451. Like, we continue to retest new highs for S&P. We are headed into earnings, so there is this could jerk back down after earnings if we get a bad report. But hey, as of now, earnings revisions so far are looking to improve. And this might be the bottom of earnings, counter to what you might think. Hey, earnings are going to be bad. Yes, they are. But if it is the bottom of earnings, if this is it, investors want to get in early, right? The market will tell us. We'll just keep our eyes on the market. All right, IWM is absolutely ripping higher. We are definitely ripping higher in IWM. The Qs are pulling back. S&P is moving up, and the Dow is also ripping up, right? So you got the Dow starting to turn up, also value stocks or the value index. And that's kind of what I'm looking here on the side. So anyway, this is NDX, right? This is the NASDAQ. The NASDAQ continues to chug higher, but it could be consolidating. It's been up a lot. If we look at the RSI, right, the relative strength index, or to make it simple, buying power, or I'm sorry, buying pressure. Buying pressure is starting to slow down. We had a lot more buying pressure back in, what is this, June, early June. We slowed down. We're making a lower high. So this is a little bit of bearish divergence because, the RSI isn't as high as it was before, but this can continue. I think with this type of momentum, we can continue. We are grinding higher. We're at the top. So it just signals that we may be slowing down here in the RSI. versus if we look at S&P, right? S&P looks it is showing some bearish divergence too, but S&P is definitely pointing higher on the RSI. Okay, if we go to the Dow, I think the Dow is barely starting to turn up. Now we're getting a new high on the Dow, right? FYI, this is a big signal here. We haven't the Dow is pressing to 6-month highs. The Dow is pressing to 6-month highs, right? So we're getting market breadth come in. And we've been talking about this for a while, but market breadth is picking up. The Dow is pushing to 6-month highs, right? And no matter what you're thinking, oh, the Fed's going to the Fed's going to hike again. The market just doesn't care. Market doesn't care because it's already sort of took these 500 basis points of hikes and continued to march forward. And so I think it's already priced in. Everything is pretty much priced in at this point. What wouldn't be priced in is a negative earnings report, right? Margin growth or margin expectations, margin guidance or earnings guidance. If it guides lower, that'll really hurt the stock market in my view. I think we will pull back, but again, we have a lot of macro headwinds that could just keep us running sideways if we do get a bad earnings report, right? IWM. So we're looking at the Russell. The Russell's pretty much breaking out at this point. Look at that. Very clear breakout on the downtrend for the Russell. And this downtrend actually broke out earlier in the year, but it got caught between this range. So you could say, hey, we don't really break out until we get above this range. And we're starting to, press that range as we speak. So the Russell is breaking out, and that is a signal that smaller cap stocks, right? There's a risk appetite for the trades that just haven't happened yet, for the investments that haven't moved yet in anticipation of the end of inflation, the end of the hiking cycle, in anticipation of the bottom of growth, and really the anticipation of the end of the bear market, right? You're starting to see that. Regardless of the news, you're starting to see people take that risk. And I said, I put out a video that said, hey, basically, if you're underweight, if you're extremely underweight, the valuations don't matter. And I don't mean literally don't matter at all. I mean, they don't matter as much because people are underweight. They're going to chase Tesla. They're going to chase Apple because they don't have enough exposure. And, also after earnings, if they do get revised up, then those PE ratios, those valuations actually improve a bit, right? And I think with the producer prices coming down, which is the cost of capital for businesses, if the cost of capital is coming down in the yields, and if you get PPI or producer prices, so inflation for producers come down, that's going to improve the expectation for earnings at the same time. So I think there's a lot of positive catalysts hitting the pipeline, and we're seeing the market bid up on that. We could get a bad inflation report. We could get a bad earnings report, but so far, we'll see. We have Tesla and we have Netflix tomorrow, so we're gonna keep our eye on that. And really, the mega caps are gonna move the market as usual, or we get a rotation. We'll see what happens. Anyways, equal weight. We got equal weight also trying to break out. Equal weight S&P 500. If you it's a little more of a reflection or a proxy to market breadth, which, okay, I know, what does that even mean? It means how much of the market is actually moving versus the, Apple, Amazon, Google, Facebook, the FANG stocks, right? So if you equal weight the 500, S&P 500, we are breaking to, what is this, February, to 6-month highs. We're breaking a 6-month high still. So the market is expanding, right? Market breadth or equity risk, the appetite for risk is starting to expand in the market, and those are sort of just the bull market technicals there. Bitcoin is dropping. Everybody said it's below 30K, but it's really consolidating still. It's just at the bottom of the range, still consolidating. I think that Bitcoin dominance is starting to come down a bit. Let's see. Yeah. Well, no, this is not Bitcoin dominance. Sorry. Bitcoin dominance is starting to come down a bit, and this might continue if those altcoins catch a bid from the regulation, right? The support over the accommodative regulation that we might see coming down the pipeline, where, you're not a security, we're not actually going to suspend you. Because Coinbase removed XRP, and I believe, quote me if I'm wrong, we pulled XRP, or they pulled XRP right back onto the exchange. So that creates a little more confidence for, institutional investors and hedge funds. Say, okay, we can take on risk as this crypto cycle starts to turn up. And it is turning up. We have bottomed. I think we've bottomed. So anyways, let's go. Hey, appreciate it, Slime Z. Hey, shout out to you, man. Shout out to you. We're going to try to improve this stream and continue. Glad to see you guys here. Also, yeah, we have good morning, Spike Dodgeball. Good morning, Norberto. Good morning. What up, Da Vinci. I don't think we'll break 455. Yeah, 455 for the S&P 500 is going to really depend. Okay, I'll go to SPY. It's really going to depend on earnings season, right? And so far, earnings seasons are the earnings are starting to be revised higher. The estimations are higher relative to the past. Okay, we're still in the weakest period. This is the earnings recession, by the way. We are in an earnings recession, but if they get revised higher, then the market will anticipate. There's going to be FOMO if markets. I'm sorry, if companies start to beat, if more looking at the macro, not just one company or another, but if more names start to beat versus expectations, then in my view, I really think that's going to bid the market up. It's going to cause a lot of FOMO. Now, the next quarter may slow down, right? The next quarter may slow down because investors are going to front run this and then maybe sell off later when there's more uncertainty. But right now, all the uncertainty, all the bear theories, or all the bear cases are really starting to disappear, and you're seeing the bears start to increase their price targets for the lows. Right now, they're like, okay, 4,000. First, they're 3,500. Now they're at 4,000. So things are starting to change. All right. Now moving over to looking at the macro forces. I like to call these the macro forces, right? And what it is their asset prices, US Treasuries, the US dollar currency, the price of oil, the volatility index, the insurance against the SPY. I like to look at these to really gauge, what is the market telling us? What are the internals, or, what are the forces that could take us one direction or another, right? Where does this boat actually move? So when we look at the dollar is signaling, I know I already went over this boat is starting to move higher, right? This ship is starting to turn as the dollar deflates or falls. That's going to increase global trade. That's going to increase liquidity in the global market. And we also see, if you want to see here, global liquidity as a whole is starting to bounce as the dollar starts to break down, right? So that's very interesting to me. Okay, that is very interesting to me. And last time the dollar peaked and rolled over was when global liquidity bottomed. So global liquidity is bottoming higher than before because when economies start to slow down, right? Keep this in mind. When economies slow down, when economies roll over, how do you think we restart growth? More liquidity, right? Whether you cut rates, whether you get fiscal liquidity, which we're getting from the White House, or whether the Federal Reserve or the Fed or the central banks around the world start buying the debt, start monetizing government debt, because we can't afford the debt, right? We can't afford the debt. The only way we even get past more debt is that they monetize it. They buy US Treasuries, and you see the Fed's balance sheet go up or something else. So right now, yeah, lending is tight, but global liquidity as a whole is moving up. So that's a big indicator. We'll go through these comments. I just want to go through the macro forces. 10-year yields, right? This is so important. This is the bond market. If there's one thing you want to learn, it is that 10-year yields, the cost of capital, the real cost of capital, may have peaked. And if it has peaked, that's why we're seeing IWM. That's why we're seeing a lot of the riskier assets start to bid up and start to pick up, because interest rate risk is now disappearing. Okay, it is now because the Fed is at pause. The Fed might hike one more time to keep expectations up, to keep their credibility. Hey, we said we're going to hike, we're going to do it, but they don't really have a reason to keep hiking if inflation is falling as fast as we see it, starting to roll over. A lot of that inflation is coming from shelter, owner's equivalent rent. And that's a super laggy indicator. Who cares? Owner's equivalent rent. We'll go over the owner's equivalent rent sometime if you're interested. But point being, inflation's coming down faster than most people believe. They hate it, but it is coming down. And inflation is not. By the way, for you guys that are out there that are new, I see people arguing in the comments on the videos. Inflation, my cost of eggs have gone up so much. Inflation is not the actual price of your items. The inflation is the rate that the prices go up. So if the rate is up a lot, your prices move up faster. If the rate is down, they move up slower. But prices always go up unless you get a productivity boom where there's more supply, more productivity, and those prices actually come down, right? But for that, you need technology, and that's why governments are investing in technology. That's why Joe Biden is investing, right, in infrastructure, in CHIPS Act, in chips and semiconductors, in the Inflation Reduction Act, because that's how you get inflation lower. That's how you get prices to come down, is more productivity, cheaper price, at a cheaper price, right? And that's what AI does. So there's a big transitioning happening as we speak. And we should be keeping our eye on that. So retail sales came out weak, right? This is retail sales. Let me zoom in here. Actually, I'm going to change the YouTube. I'll go over these comments in a second. So these are retail sales. Retail sales are cooling down. So all those inflationists out there, retail sales are cooling down. They're not, the economy is slowing. We've said this multiple times. The economy is slowing, but it's not collapsing. It's slowly. This is like the perfect scenario because you don't have any type of growth risks. People are still spending in the services economy, and U.S. retail sales are going to comprise mostly of goods, right? More hard, durable stuff for the most part, which means that you have deflation or disinflation in the goods sector, while the services sector, you have growth, which is not growth is not decelerating in the services sector. It's actually starting to pick up the future expectation anyway, right? So what are retail sales? It's just a survey, motor vehicles. So this on the right-hand side, what it is going to be motor vehicles, food and beverages, general merchandise, food and drink services. So you got some services in there, e-commerce, gas stations, right? So it's a mix of both. But for the most part, those are starting to slow down, and that is the data we got today for retail sales, that they're starting to slow down. And as soon as we got that, as soon as retail sales came out, weaker, and I guess you didn't really see the change. Let's look at the month over month change. This is it right here. We bottomed in April at 1.3. We went up to 2. So we're slow. We're moderating, right? The retail sales indications or the measurements. And if you don't, hey, listen, if you're one of those guys who doesn't believe anything the government says, then I'm sorry. I mean, it's there's not much to say. People will take the opposite. I'll put it this way. People are just professional. How do you say it? There's a lot of professional, what is it called? Counter, when people are just counter to everything that comes out. Dang, I can't remember the word. Anyways, they're professional at just saying the opposite, basically, right? Without actually backing up their claims. Either way, maybe these numbers are off. It doesn't matter. The trend is still lower, right? The trend is still lower. Inflation is not rising. Retail sales are not rising. Companies are actually, their revenues are lower. So it doesn't matter if if the data is off by a point 0.0203, right? Nobody cares. It's the trend. Because we're speaking of the stock market here. We're speaking of risk assets, investments, right? Wealth down the future, not your daily. This is about how the market responds to the data, not necessarily what you think. Okay. It's how the market responds to the data. Retail sales year over year. Oh yeah, that was year over year. The more important data point is actually this month over month. Usually this is what they highlight. The month over month was at 0.2. We were negative early in the year. We came up. Now these are month over month numbers, so it's going to be a little more volatile. But what it does reflect is that, things are starting to slow. We're not seeing inflation in the pipeline. If we did start to pop higher above 1%, then you could say, all right, maybe we get some goods inflation, maybe we get some services inflation. That's just not the case right now. That is just not the case. We're not seeing that. So my bet is everything is slowing. Inflation comes down lower. Now, industrial production, this is not good. This is where this is showing that growth is starting to continue to decelerate, right? Growth decelerates. And, we're in the negatives now. We're in negatives for industrial production, and you want productivity. I always say that you want productivity, you want production. So we'll see. Hopefully that turns around at some point. I don't know if it's leading or lagging. I'm gonna have to do a little more research to find out how important that is. Month over month was negative also. So this is really pointing to a slowdown of our economy. And that's not good. That's actually not good. We don't want that to happen. We want productivity to pick up. All right. We want productivity to pick up, but it does signal, hey, to the Fed, there's no reason to hike. Growth is already decelerating. It is continuing. Now they can hike a little more, but they're not going to get super hawkish at the end of the year because things are starting to slow, right? So we are getting that slowdown. Now here's the optimism. Here's what we got in the optimistic part, right? The housing market index, the NAHB, sorry, housing market index. This is basically, home builder sentiment. The home builders, their sentiment, positive or negative. What are their future expectations of growth or, demand? And it's still grinding up. It did slow down month over month, but it's grinding up. So, what that means is the housing market, that's a signal for the housing market to actually be bottoming, which is why we see ITB, which is ITB is the ETF for home builders, home builder construction, or US home construction. That ETF is at all-time highs, right? It is marching higher. People are buying that stock because they obviously we're the building market is starting. Well, this is US home construction, but the point is the housing market, there's a lot of signals for the housing market to bottom, which was the biggest recessionary, economic signal, and the macroeconomics was the housing market first starting to slow, but it's not collapsing because people are not leaving their houses. I think this is really the thing. People are not leaving because why would they leave to go get higher rates, right? They're sticking with their where they're at, and they're not switching. So they're just not switching, and they still have jobs because of all the fiscal policy and a lot of the layoffs. You have a lot of job openings, so even if you lost your job, you found another job. So that index is still moving up, right? All right, so let's look at some of these. Here, I'll put this on here. Biden signed Executive Order 14067. They are now testing digital money, their agenda to eliminate untaxable and untraceable cash and crypto transaction. How does that affect what you're saying? I mean, I'd have to read it. Their agenda to eliminate untaxable and untraceable cash and crypto transactions. I mean, they're not trying to eliminate crypto transactions. They just want to trace everything. That's pretty much it. I mean, this is part of the government trying to retain taxes, because here's the real issue. This really is nothing new. It's just more executive action to surveil the money trails, right? To surveil the money trails, and that's not really going to change, especially as technology and AI starts to pick up. So the big agenda here is that, hey, the government's actual transaction fees are going higher. They're going much higher than they were before. I'm sorry, their service fees for the debt are going a lot higher, and because of that, they need to find ways to get more money, right? Other than surveil, obviously, the population. But this is not a political thing. This is just every government's going to be doing this as you go into digital currencies, as you move into Fed now, or the elimination of cash, hard cash in general. As you move that way, the nature of it is more surveillance, right? So that's why crypto's so popular, but you still want to be able to trace crypto, which you can on the blockchain. You can still trace every Bitcoin transaction, just not to your identity. So this moves into a bigger, more philosophical, area where, hey, what's going to happen with how does crypto merge with the traditional financial system? Do you have full transparency? Do you have full privacy? You're never going to have full privacy really on anything, because we live in a digital world now. Everything is traceable. So what you need is zero knowledge proofs. You need decentralized Oracle systems, which is why we're bullish on Chainlink. And that's going to take some time to actually play out. But for the most part, with AI, it's going to be tough, right? It's going to be really tough to get away from the government, because the government's going to use AI to obviously fulfill what they want to do. Okay, they're going to try to use that. Anyways, back to the that was a very complicated philosophical question. Let's get back to the stream. Let me see. Yeah, let's get back to these S&P 500. Here we go. So S&P 500 in the short term, we are starting to move up. I wanted to point out for some of you guys really quick that we have Zoom. I'm looking at Zoom. Let me see. Probably missed some comments on here. Starting to look at Zoom and Teladoc. Let's go. Yeah, Teladoc. We're in a bull market. Check out Teladoc. TDoc is finally starting to break that trend. Okay, TDoc is finally starting to break that trend. It had a huge gap up this morning. I don't know if it was from. It could have just been from some shorts covering, but the long options on Teladoc are insane. The gamma is insane, meaning the risk to reward is really good. Given obviously that it grinds higher, but this is a huge break of trend, but it looks like it's starting to fail now. So just keep your eye on that. Teladoc holding above what, $25, $26. If we can hold above that level, right? And maybe that was just a blow off top this morning. If we hold above that level, then this thing could start to get some legs. So you really want to look at ARK. Where's ARK at? How is ARK starting to trade? And if you believe in Teladoc, now there's a lot of fundamentals to look at here. Their revenue's been falling a lot. They've had a lot of issues. But if this is the turnaround, this has a lot more room to go higher. And maybe it fills that gap at 25, sort of gapped up at 25. And if it does, break above that level, or if it does come fill the gap and start to reverse, then this could be a nice trade. I'm keeping my eye on it. And I'm looking longer term. I'm not looking at a day trade. I'm looking to trade Teladoc back to 100, right? Big move. So very long dated options, because I'm looking at a longer time horizon than most. So That's basically the trend that broke. If Teladoc can come back, if the business is working, right? If they're actually doing what Kathy Wood says, go read her research, and I'll dive a little deeper into that into the future. This could very much be one of the best, biggest risk reward trades, especially if rates start to come down also. So looking at ARK Invest, so if we do take a look at ARK, ARKK, where's my ARK at? Take a look at ARK, and what is ARK doing? ARK is starting to rip higher. So ARK's gonna definitely, it's a big boat, it's a big ship, and it's gonna pull a lot of those risk assets that are inside the fund higher. Okay, and so that's why I'm thinking, hey, Teladoc could really break out here and hold that level. If that is the case, then that might be a nice trade, right? Just to let it play out on a longer term time horizon. ARK is definitely grinding higher, especially with Tesla coming out. Tesla's been moving up. That's heavily weighted. So keep your eye on ARK. Keep your eye on Teladoc. Well, I am anyway. We've already, talked about Open Door. Now Zoom is finally starting to. I know some of you guys, we talked about big man's coming. We talked about Zoom a lot. Zoom is looking solid, right? Zoom is really looking solid. It's finally broken the downtrend, and it's gotten above the previous resistance level, right? Remember, Zoom was a $500 stock at one point, 550, 560. We're sitting at $70 right now, right? We're down a lot. So Zoom still has a pretty good market share, and the fundamentals are still pretty solid. It's sold off. I think it's just extremely oversold, and it's now getting above that previous resistance level that was put in, I would say, back in May, right? It's finally getting above that level. It's broken the downtrend, and it looks like it's holding today. Today, sort of sold off, got it down to 72, and it's holding that level. Now you got the Q starting to turn up. You got S&P at 452 making new highs. You got advanced decline going up. The Dows, everything is ripping higher. This is a bull market. So where are the laggards at, right? I think Zoom is one of those laggards. I think Roku is one of those laggards trying to break out that has a lot of room to the upside. I think, ZS might too. This is a Zscaler. I'm less familiar with Zscaler, but they are a cybersecurity company. And Zscaler is showing a pretty nice bull flag. We'll see if it actually can move. I'm not too interested in Zscaler though. And then Teladoc, obviously, because the options on Teladoc are monstrous, right? You don't have to take too much risk to actually profit if this thing moves up over the next 12 months. You just don't have to take that much risk. The gamma is really nice. And you have a flat bottom here at 22. So there's a lot of support there, right? Coin obviously is already breaking up, and SoFi has been ripping up. Palantir is ripping up. SoFi's broke that wedge. They're starting to get to the next level there. So SoFi is looking good. Over 10, SoFi should probably rip because 10 is a psychological level. Is LUMN? Let's see what LUMN is. No. Lumen Technologies looks terrible. It's probably some type of, I don't think so. Lumen Technology, just looking at the technicals, this thing could really start to slide much further than it is currently right now. All right. So anyways, MicroStrategy moving up, still hasn't had a pullback. There's a lot of shorts getting squeezed here on MicroStrategy. All right. Now there's some other stuff I wanted to go over, right? Really today, what we saw was retail sales came out weaker than expected, but not negative. So they're still positive. We got bond yields, pulling back a little bit. So that's gonna deflate or lower financial conditions or ease. I'm sorry, that's gonna ease financial conditions. So if these things have peaked, if bond yields have peaked, if people are coming into the US bond market, right, and starting to buy bonds, it's gonna pull yields lower. And I think these riskier assets are really gonna have a good tailwind there. I think they're going to really see a good tailwind there. Also, we forgot to look at oil. Oil is consolidating at these levels. Be careful going short oil at this point. It did support that 74 level. It's now at 75. So be careful there. I know there's a couple, shout out to you, Pack of Lettuce, if you're on here. I'm not sure if you are, but oil holding that level is pretty bullish. This is a bullish signal for oil. Okay, oil is moving up. Hopefully it doesn't continue because the Chinese PMIs or Chinese manufacturing is still weak, and manufacturing usually leads the business cycle. So, but we just don't know. The SPR is still getting drained. You need more productivity to come in, and OPEC may be cutting their productivity further. Even though Russia and Iran are selling cheaper oil and taking the market share, maybe Saudi Arabia just doesn't care. So I'm keeping my eye on here. I'm wrong if we get above 77, if we break higher. If we get above 84 or 83, definitely wrong about oil. And that's where I'm wrong, right? I'm not going to just say, oh, oil's going lower for no reason. The technicals tell me they're going lower, especially if I look at the moving averages, right? You're getting a rejection on the daily, the 200 daily moving average. So we are getting that rejection there. So we'll see how that actually plays out going forward. But yeah, big man's coming. Yeah, we got that support on ZM. I'm actually looking to add on ZM. As we get the support, we're starting to consolidate in that little range there. AMD also pulling back into the trend, maybe adding to AMD. And we'll look at those charts in a second in a little more depth. Okay. Let's see. Loom. No, I don't think so. Schwab, SPY. So, anyways, check this out. I'm gonna go on Twitter. I'm gonna show you guys the Twitter. Look, check out this Twitter stuff. There's no recession. That was the whole thing. So Jerry and Timmer, right, yesterday, came out with this tweet. And he basically says the stock market has regained nearly 3/4 of the ground it lost last year, right? We're in a bull market. Bear market rallies don't retrace much more than half of their preceding decline. So we've already retraced more than 50%. That doesn't happen in a bear market, right? And when they do, they're usually new bull market. So when we do retrace more than 50%, that's usually a bull market. With our current 73% retracement. And guess what? Today, this was yesterday. So today we're even grinding higher. Today's even higher. Let's just get the rest of his tweet. And so, yeah, so this is, what does he say here? History seems to be on the side of the bulls. We could still be in a long trading range like the 1940s, but the market has now spent a year and a half, a long time bucking the long-term uptrend. And this is basically S&P 500 in black today versus historical versus the historical bear markets, right? The other bear markets, when they did retrace more than 50%, they usually rolled over. So we're at 73%. Like, this doesn't look like a bear market. And this is Fidelity Research. This is Jurian Timmer. He's a macro strategist over at Fidelity. And so that's just a little bit of juice there for the bulls, right? A little more context. And then here we got this morning here we got this is Tom Lee, but this is Bank of America research, right? So Bank of America is just showing us that basically the SPX advanced decline line is hitting new highs. So for all those people, there's not market breadth, advanced decline for S&P 500, right? The advanced decline line, more stocks advancing than declining are breaking all-time highs. This is down here at the bottom. So at the top, we have the actual index. We're at 450. What are we at? 455 right now? S&P 500, we're at like 455. But at the bottom, you see that there's a breakout of the more stocks advancing versus declining. I always say market breadth, but it's momentum. It's basically overall momentum. You're looking at all the stocks in the S&P 500, and when you compare the stocks advancing versus declining, we're breaking out to all-time highs, right? More stocks are advancing versus declining, all-time highs, bull market. Here we go. So this is a bull market. Oh, that's the stream. All right. So anyways, back to it. I just want to show a couple, I'll have, and again, if you're not subscribed to the macro report, all this data will be in the macro report. Link in the description, link in the bio. Go subscribe to that. It comes out every Saturday morning. Then I'll go over it also on Saturdays, and just so you could read all the stuff. Now from FactSet, we are seeing from FactSet, which is basically S&P 500 earnings. Here's another bullish signal. In green, you have how many companies are beating expectations. In red, missing expectations. And in yellow are just in line. So far, now listen, all of the companies have not reported obviously yet. So this is going to be changing. We haven't even got the other sectors yet. We haven't even got materials or energy, but we're going to keep track of this. I'm going to keep track of this every time it changes, every time it updates, so we can see where are the earnings estimates. And the reason why this is important, because the earnings season is probably the biggest catalyst, right? Even if your revenues come down because economic growth is slowing, because inflation is coming lower, and inflation comes down, that also pulls down a lot of earnings for companies because they win from inflation. A lot of companies do better with inflation. So The real key here isn't pure revenue growth. What it is can you retain your earnings, right? Can you retain earnings while the cycle starts to slow? So those companies that are doing layoffs and that can use AI and really just be more strategic about how they build growth or how they sustain their growth, they're going to do a lot better than the other companies, right? So we just want to see, hey, are those estimates coming in better than expected? This should be the lowest earnings report. The lowest earnings we've seen for this year. This is forecasted to be the deepest. I believe, yeah, this is forecasted to be the deepest negative earnings for the S&P, which is Q2 of 2023. Where are we at? Yeah. So the estimation is that we are negative 7.1% or negative 7% basically in S&P 500 earnings. And revenue is, what is revenue? Revenue is looking like, I'm just looking down here, negative 0.4. So that's not too bad. Revenue isn't too bad. Point being here is, if this is the bottom of earnings, and we're going to keep track of this, the market is going to start to bid up, especially with the fiscal policy coming in, the end of the rate hikes. Yes, it is kind of like a sketchy, because you're thinking, wow, the Fed hasn't stopped hiking yet, right? The Fed balance sheet is still going down, but keep in mind here that there's a lot of fiscal policy hitting the tape, right? We're seeing a lot of that fiscal from the governments and other governments too. And global liquidity is also picking up. And when the economy slows enough, when inflation comes down enough, and that's really the biggest catalyst, people are off sides, then we start to see more QE, or we get rate cuts, right? If inflation gets back to target, we could be seeing rate cuts this year, because it's already coming down faster than expected. I seen a guy yesterday say, hey, inflation's going higher from here because of the base effects. Not necessarily. It's a rate of change of inflation. So it's not going to go higher. It'll just slow down on the downtrend, right? The downtrend is going to have to slow down. So that's pretty much that. I mean, we're in a bull market. I mean, I would love to see, love to hear somebody refute that, because there's a lot of reasons why you could say, hey, the yield curve is inverted. But, the yield curve has been a historic, where's the yield curve at? We'll go to the yield curve. The yield curve has been a historic indicator when the Fed doesn't speak as much. But nowadays we have so many expectations. You got to put this on a regular chart. We've had so many, signals from the Fed, or telegraphs, that we're going to hike rates, that really people front run the markets, right? We have information instantly. We all know what the Fed's doing instantly. We get literally breaking news reports instantly, which means this yield curve isn't the best signal as it was before. I would even argue we've already been in a recession. We've already seen the recession, and the economy, or the stock market, the equities in general, have been very resilient, supported by that fiscal policy. So this yield curve inversion isn't really that heavy to the downside, right? It doesn't mean much as long as they resolve the growth issues, and it looks like they're already resolving the growth issues. Now, once we start to steepen, that's where we'll see, okay, is there real issues when we start to steepen? So the yield curve, I don't think it's that important as much as people think. We already had a banking crisis, so it did signal something was going to break, and it did, and they fixed it right away, right? So of course we still have to keep our eye on that. I think it's just really all about inflation. Once inflation drops significantly, and then we get GDP back up, we should be fine. I don't think the yield curve means much other than small bumps in the road. Right now, credit risk, we got to keep our eye out for this. Credit risk is going lower, so we don't really see a whole lot of credit risk. All right, so AMD is starting to turn up. It looks like ZM is supporting, very nice support there on ZM. I'm going to look for a pullback on that one. That looks really good. All right, let's go to those other charts. Now we can look at the trader charts. How you doing, Hassan? How you guys doing today? Good to see you. Good to see you. What layer, let's see, have you figured out what eigenlayer restaking is? No, I have not. You should write about it on our website. Eigenlayer restaking. Go to mindgrowth.io and create a profile, and then just put it under crypto and tell us what eigenlayer restaking is. Remember, there's thousands of projects, so there's so much information out there. I don't really have the time to look into something unless it's very significant and a lot of people want to see what that is, if it's a really great project. Other than that, I really don't know. I'm more so focused on Chainlink, like I told you before. CCIP just went live, so cross-chain interoperability is now live. Oops, let me switch the screen. Sorry, guys. No, I haven't looked at Egan Layer. All right, so actually, nah, this is not the screen I want to see. We'll switch to these double charts. Yeah, here we go. All right. So, all right. So right hand side, we do have Tesla. Now we have earnings tomorrow, right? After I think after the market. So this price action, I'm really not discounting any of it. I'm not even interested in it. What I'm really looking at here is Zoom. Um, Zoom has broken the long-term downtrend. It is now above and consolidating above the previous highs. So right, this is the zone between what 73.50. So we're like at 70 between 73.50 and looks like 72 really. So we're consolidating at the zone, okay? And I want to get in here at the zone with the stop holding below 72. That's how I'm looking at this. Now I'm already in because I got in earlier, but I want to add to my position. I think Zoom has a lot of room to run. So as you see here, we broke those previous highs. We'll probably go retest 74, 75 pretty soon, especially with the way the market is looking right now. Now on the flip side, on the left-hand side, Google, not looking at Google, AMD, I'm looking at AMD. I want to see if AMD can break out. AMD's been trending higher. It has been trending. And this is pretty much the trend for AMD. Okay, this is a trend for AMD. Waiting for the rotation out of NVIDIA into AMD. NVIDIA is very bullish right now, though, so I don't know if we're going to actually get that. Like I said, I'm hoping we actually see that at some point. But this is ZM. Okay, that's if you want to know what am I most interested in. I'm looking at long dated options, 2025 really. So I'm looking more than 12 months out. I'm looking very far out. It's a very easy trade looking at the macro, and as yields come lower, risk assets are going to go higher because they want lower interest rates. They do better. They're easier funded with lower interest rates. That's just how the market works. So as those rates come lower, I expect Zoom and some of these riskier assets to go higher, unless they have a terrible earnings report. But I think they're still pretty solid. I think they're still pretty dominant in the market. Right now on the left-hand side, obviously we know the narrative here. The picks and shovels, AMD being one of those picks and shovels. Is it as dominant as NVIDIA? No, but AMD price action hasn't moved yet. So this is more of a catch-up trade that I'm looking at. AMD is not at all-time highs. And when it does move, it moves. It consolidates and it breaks a lot higher. So we could be just consolidating for a while here. Either way, I'm just keeping my eye on it, right? Because if we do happen to show support, this could be a really nice trade back to the highs, or at least back to the 52-week highs over here at 133. So we're looking at 115 right now. Those are the calls I'm looking at, 115, 2021 calls. And this is the zone that we need to show support on, I think, from yesterday. No, we dropped out. I should have actually got in down here yesterday, but I was talking and I missed it, which is totally fine. You're going to miss things. So yeah, that was a nice wedge too, right off of VWAP when it came to AMD. Very nice wedge there. Good morning. How you doing, William? Chainlink at 7. Yeah, you saw Chainlink make that big move. CCIP, a lot of plans with CCIP. We can go over some of that stuff. I'll probably release it pretty soon here, but yeah, Chainlink is looking solid, man. A lot of progress there for Chainlink with the central banks. And I really, like I said, I think Chainlink's going to be one of those projects that, and it has a lot of steam behind it, right? It's a solid project if you ask any crypto enthusiast. And it has a lot of use case for central banks, for the Swift network, right? It has a lot of use case, not just a meme coin, and it's really connecting all blockchains together. So if you think about DeFi, you think about Web3, all these different blockchains and cryptos, they can't really interoperate with each other securely, efficiency, with full transparency. They can't do it. A lot of them are centralized, and a lot of them don't have the technology to do that. So CCIP or Chainlink allows them to interoperate with each other to build the DeFi network, sort of like the financial system, and then also to connect with the real financial system, so that you have big banks, big, Swift network, Visa, whoever it is, you have them able to use DeFi to do what they want to do, right? To increase their productivity, to increase their efficiencies, and to have guarantees, right? Have guarantees like, oh, we guarantee this is true because we are using the smart contract platform. It is very technical, but Chainlink is definitely one of those projects that can do that. Here we go with AMD. So AMD looks like it is starting to wedge a little bit here. See if we can hold that 75 level. And then on the left-hand side up here, we got the Qs. So if you're looking for the Qs, if you do see the screen, we got the Qs on the left-hand side. You got IWM supporting VWAP, S&P at 452. Wow, S&P is just grinding higher. S&P is very strong, right? Before earnings, very strong. I'm telling you, this is a short squeeze. Why do we keep going higher? Why are we going higher? A lot of people are off sides. Morgan Stanley's Gorman says it's hard to argue for more rate increases. Rate cuts won't happen this year. Maybe we don't get rate cuts this year. Maybe we don't get rate cuts this year. But does it really matter if we don't get rate cuts? I don't think so, because growth is accelerating. And we've already seen in 2017, 2016 to 2017 to 2018 pretty much that rates were going higher. The Fed's balance sheet was at pause and it started to decelerate, and the market was still moving up because of that fiscal policy. And we've had massive fiscal injections. Like, I think that is the story looking back in the future. We're going to look back and say, why did the market move so much during a tightening cycle, right, in October? Because of the fiscal spending, Yeah, Chainlink at $6. Yep, 100%. So yeah, looking at S&P, very, very strong. We're breaking the previous day highs. This is insane strength, right before earnings. And I know what they're going to say. This is a blow off top, overbought. But you got to keep in mind, everyone and their mom are off sides, right? And what I mean by that is there's just a lot of cash on the sideline. Those money market funds yielding 2%, yielding 5% a year, they're going to capitulate at some point. They're going to capitulate, and that cash is going to drain back into the capital markets because you're getting 5% a year on your money market funds. Okay, what does that come out to? Less than 0.5%. So if you're getting, If you're getting 5% every 12 months, and you divide that by 12, you get something like 0.3% per month, possibly. Maybe a little more, 0.5% per month. You're getting a small amount per month, right? And you got to wait 12 months to get that cash actually realized. And meanwhile, the S&P, right, is up 5% in the last month. So it's just not really a good risk reward to be in those money market funds unless you're just preserving capital. And people like risk. They're going to want to go risk on at some point. Look at this wedge that broke out. This is really the big wedge from the S&P earlier in the year. And trust me, hedge funds, family offices, any type of trading organization that does technicals, these are why technicals are important. The breakout comes right out of that wedge. And since the breakout, since we got over 410, the S&P is up 10%. So it doubled the money market funds from that spot, right? You're getting 5%. Well, the S&P, and the S&P is an index. It's not even, S&P is an index. It's not even an individual stock. It's not a blue chip stock. There goes ZM breaking to new highs. Wow. Should have been adding there. I might have to add on this stream to my position there. Roku still sort of struggling at that level. Let's check out Roku on the left-hand side. All right, all-time highs. Let's go. Yeah, I think we go to all-time highs on S&P this year. Earnings are going to be vital, but I think if we get past this, this is expected to be the worst earnings. These are the lowest expected earnings estimates for the year. And even though people think, oh, earnings are going to be terrible, so let's sell everything. Well, the market doesn't think that way. The market looks as in, oh, okay, this is the worst earnings. The Fed is on pause. Inflation's coming down. Well, this is it. This is where we buy. Now you need positive guidance, right? It's not just the bad earnings. What you need is, okay, this is the worst earnings and guidance is going higher. That's where where's my strike for Zoom? My strike is, where's my strike? Let me double check. You guys want to check out my strikes on Zoom? My strike on Zoom is we are looking at 75. I got the 75 strike on Zoom. A little out of the money. Break even at 92, 75. Yeah, you got that 75 too. Big man's coming. Here, I'll just show you my screen. Show you what I'm looking at here. Yeah, here's my Zoom, basically my Zoom calls. Got 4 contracts. I'm looking to add a little more. I'm a little cautious from earnings though. I'm just a little cautious going into earnings season. I might add 1 contract, not get too fat, but add 1. So yeah, this is it. Basically got the 75 strikes. Okay, not financial advice, just to say that on the stream so nobody sues me for trying to copy me. But 75 strikes, I'm looking out to 2025, January. So really, when do I want to cut these? I want to cut these when the Fed really starts to turn QE back on. And I think that's going to happen next year. I think QE comes back in 2024 at some point, and really the riskier assets start to explode. And that's why I have this out to 2025. I'm just looking at the end of the cycle, right? I think this is the bottom of the cycle. I think we're maybe if you look at if you try to picture the entire cycle moving up, I would say we're maybe 10, maybe 15% from the bottom of the cycle, right? Not as far as S&P 500, but if you just look at the potential, I think we're 10, 15% from the bottom of that cycle. And we should be grinding higher from here. But Teladoc, on the other hand, I'm keeping my eye on Teladoc, like I said, because those options are insane. They have to have a very disgusting earnings report. Like something has to be wrong with them because they're pricing those options like very, very, very risky. The gamma is just insane, right? If you look at the 2025s, and they're very cheap. So check out Teladoc, but I wouldn't get too bullish on Teladoc yet, just because they do have a bad not earnings track record. But if we look at Teladoc, they've had some terrible EPS. Hopefully this is the bottom, right? Let's look at the Teladoc really quick. TDoc. Hopefully this is the bottom. So you can see their EPS. I don't even know how this happens. Their EPS went from -2. It was in the negatives, right? They hadn't turned a profit yet. And then 2022, they went to -84. -84 EPS, right? Which basically just means the earnings went negative. The revenue's still going higher though, right? Revenue's still up. Shares outstanding didn't really change. They did get 2 upgrades though. In October, they got upgraded by Guggenheim and SVB Securities. So they got a couple upgrades. Equal weight over here in April. They got equal weight. Let's see. Teladoc turns to Microsoft AI for healthcare automation. Maybe is that why? Oh, this is why we upgraded. This is why we broke out in Teladoc. Let's check out this report, because Teladoc is one of those plays. I'm looking very far out. Like I said, I'm not looking short. I'm looking very far out from here. Dang, Zoom looks good, man. Zoom making breaking to new highs. Very nice consolidation. Very nice consolidation on Zoom. Definitely, yeah, 75s look good. So here's Teladoc, right? Let's look at some of this. Does this make sense? The heck? They're gonna really push me to another article. That's crazy, man. Nobody wants to read. Nobody wants to see that. All right. Oh, they got it covered up. I'm gonna have to find it somewhere else. So they basically have the cover. You have to buy the story. Wow. Microsoft AI for healthcare automation. Teladoc expands Microsoft tie-up to document patient visits with AI. It's more AI stuff. Teladoc Health expands. Maybe there's a free story in here. Let me try to find it. The global leader in so Teladoc is the global leader in whole person virtual care. Today announced it's furthering its collaboration with Microsoft by working together to integrate Microsoft Azure OpenAI service, Azure Cognitive Services. Can we see that? There we go. Azure Cognitive Services and the nuanced Dragon Ambient Experience. Don't know what that means. DAX into the Teladoc Solo platform. The integrated solutions will automate the creation of clinical documentation, automate clinical documentation. That's a hassle during the virtual exams to help ease the burden on the healthcare workforce. Productivity, right, at a tenth of a cost, while improving the quality of shared medical information and the care it supports. The Teladoc Health Medical Group also plans to use Nuance DAX Express, don't know what that is, for care visits provided directly by Teladoc Health. Administrative burden and staff shortages are a major reason. So you have a lot of staff shortages. So what does this do? It comes in, it fills the labor shortage. AI comes in and fills the labor shortage, and you get more productivity, and it's just going to be faster. Chief Medical Officer at Teladoc Health, we are focused on using AI to reassert and build the doctor-patient relationship at a time when technology frequently does the opposite. We are a proud to partner with Microsoft and Nuance to break new ground. Okay, by 2025, the U.S. Department of Health and Human Services predicts that there will be a nationwide shortage of 90,000 physicians, worsened by professional burnout related by the demands of electronic paperwork. Yeah, forget paperwork. Paperwork sucks. Don't you hate going to the doctor and having to deal with paperwork? Like, why do I got to fill out my birth, my social, fill out all this like, bro, why? You should have that saved somewhere, blockchain. That should be saved somewhere and it just gets accessed, right? And if I have to make changes to it, I got to make changes to it. If I don't, why am I rewriting this? Why am I filling out patient exams 24/7? Everybody hates it. It's a waste of paper. It's a waste of productivity, and it needs to go digital, right? So there is going to be a demand for AI in the healthcare sector when it comes to this type of stuff, right? I'm not a micro strategist, so I can't, I don't know, specifically, but it makes sense to me, right? It does make sense to me, especially Teladoc being the leader, having so much demand in general. I used to use Teladoc. It was cool. I just literally scheduled the meeting, and then the doctor came up. We talked to him. I talked to him, told him what was wrong with me. I can't see out of my left eye. And then he's like, all right, well, just do this. Here you go. So Teladoc is a prominent service. And I don't know why the earnings are so bad, right? I got to look deeper into that. I've read a little bit on it, but it just could have been. I'll read a little more into it. For the most part, I just want to catch the technical breakout, right? I want to catch the technical breakout. If this is the bottom of Teladoc, if the business is not going anywhere, if it is a monopolistic type of business, this stock should really move a lot higher. So I'm looking far out, no short day trades, none of that. I'm looking to catch this on the on the macro cycle, right? I want to see the whole macro cycle turn and then catch this. Let's see. Oh, they let us read more. Okay. This frees up beside nurses to focus on hand-on patient care and improving staff satisfaction. Got to breathe here. We are pleased to continue our collaboration with Teladoc Health, leveraging innovative technologies that help make it easier for clinicians to deliver care virtually and enhance patient experience. Blah, blah, blah. Teladoc Health integration, Azure OpenAI service, and Nuance DAX gives clinicians the tools they need to deliver quantity, coordinate care, easing administration burdens, and allowing them to spend more focused time with their patients. Okay, so this is just, whatever they're using, Nuance DAX Express. Don't even know what that is. I'm not going to look into it right now. But hey, once Teladoc, let's say Teladoc makes a big move higher, if it can support this gap, that's when I'm going to say, all right, how long can I actually hold this? Does it have legs? Let me look deeper into the fundamentals. But for the most part, when inflation decreases, when risk assets go higher, everything's going up. Everybody's underway. Everybody's already, pretty much dropped Teladoc. So any bit of good news to the upside is going to cause a FOMO into some of these stocks. And that's probably why we got that big gap up today on Teladoc, right? So now I am zoned into Teladoc because I think it can be a big mover. And Kathy Wood also holds it in high regard. And I know people say, oh, Kathy Wood, she doesn't know what she's talking about. Dude, this is one of the blue chips. So Teladoc is a blue chip. It's not just some random stock. And I believe what is it? Is it ITB? The healthcare ETFs should start picking up. So another proxy for, actually, you know what? It's probably here. No, it doesn't show it. Okay. Where's the healthcare ETF? What is the healthcare ETF? Somebody throw it out there, because you want to keep your eye on the ETF also for healthcare, as it correlates or, coincides with the price action of some of these healthcare stocks. So, and it's not a biotech. Biotechs are tricky, right? This is not a biotech. I think it's IBB. Yeah, it is. There it is. iShares Bio. Well, this is the biotech ETF. This is the biotech ETF. What is the healthcare ETF? I know I have it on my watch list somewhere. I'll look into that while we're here. 'Cause this is an opportunity that I'm starting to see. Yep, there he goes. S&P 500 breaking out again. All right, let's see if I could find that healthcare ETF. It should be in the XLK zone. Why isn't it there? XL healthcare XL. Watch, should be here somewhere. XLC. Okay, how did I miss that? XLC. I'm gonna have to add that in. No, that's not it. Oh yeah, XLC. Yeah, that is it. XLC. So this is oh, this is communications. What the heck? How did that even pop up? No, I'm looking for healthcare. XLH. Where's the healthcare ETF? I can't remember what it is off the top of my head right now. But I should have XLH on my watch list already. So let me see. Why don't I have XLH? Do I? I mean XLC, my bad. Yeah, I do have XLC. XLH, is that it? No, that can't be it. Do some research while I'm on here. Healthcare Information Services. Cobb, FLV. What are those? Where do you see Tesla earnings going tomorrow? Next Nvidia. No, we could do Nvidia. We could check out Nvidia. We can definitely check out Nvidia. I'm trying to see. Okay, Teladoc is finding some support. I'm really trying to find out where what the ETF is, dude. I've had it in my watch list for so long. I should know this. XLY, XLC. Where's the healthcare ETFs at? Maybe UNH. Maybe UNH. It'll pop up on Finviz if I look at UNH because that's the biggest healthcare stock. PLV, IHF, healthcare provider ETF. IHF. Do I really want to look at that? IHF. We'll see. What does IHF look like? What is the best healthcare ETF? Let's see. Let's see. Investopedia. Is IHF really one of the big ones? I could have sworn there's a totally XLV. Oh, bro, XLV. XLV. Do I not have that on? I don't. Okay, so that's where I've been missing. I knew I was missing something. XLV is the S&P 500 sector ETF for healthcare. XLV. So I need to add that to my watch list. XLV. So my whole point was to find XL or not to find XLV. My whole point was to track Teladoc. Well, I'll be tracking Teladoc with the XLV ETF, right? The more momentum it gets, the more sure I am that Teladoc will definitely appreciate just off the back of the ETF, right? And if it has a better story, that's more variables to the upside. So tracking, that's why I use ETFs to actually track other names that I'm looking at. If the ETF is dumping, then I know then it tells me there's less of a chance for the underlying micro, unless there's a really big narrative that it's going to slow down my trade or my investment that is within that ETF. So XLV. So we're getting an XLV looks like it is starting to break out a little bit. See Roku. What are we looking at here? Roku. All right, so XLV got that up there now. Roku, S&P at the top. Who said S&P can't get a 455 today? It probably won't. That's a big move, but the S&P is moving. So a lot of these riskier assets, you just got to have a big time horizon. And this might be it, man. PDOC. Actually, if growth starts to slow down, you're gonna definitely get more. Look at that bottom. Is it starting to bottom here? Might just have to get some long Teladoc. I might go long Teladoc here. FLV. Oh, okay. Fat finger is Cobb XLVs. All right. Thanks, William. I appreciate it. There's a bunch of ETFs. I just want to stay consistent with those XLs, right? The S&P 500 related ETFs. Definitely want to stick to that. All right. So forget the 15 minutes. Go back to the 3-minute. Wow. Look at that price action on S&P. I love to see that. That is a nice pattern. It's a lot of buying taking place here. And we have some good news. Morgan Stanley's Gorman says a recession is less likely. So look, we've been saying this for a while. There's a less like the risks of a recession just continue to fall. Now, yes, retail sales came in easier, but that also lends or directs the Fed to slow down, right? To not be so hawkish. All right, so now Slime Z, Manny, you can always tell me, ask me what you want me to do some TA on or check out the earnings. So look at Tesla earnings. I don't even know what we're expecting for Tesla earnings. There's a lot of expectations here. I'm really looking for the guidance, right? For guidance to be higher. And I think you also have to wait for the earnings report. Not the earnings report, the earnings call to hear how they pretty much spin the report. But what's going to be big is more than the revenue, more than the margins. Margins could be a problem too, if margins could. But they might say, hey, this is the lowest margins that we're going to have. We're going to increase prices going forward because we have enough market share. So I like to look at the earnings after the fact. I'm not going to, predate any earnings or not predate. I'm not going to predict any type of earnings because it's just kind of silly for me to do that. I'm not an earnings analyst. But after I see the earnings, then I can determine, is this nice break of trend? Is this something to get behind on, right? So first you want to know, what are the numbers? Did they beat EPS? Did they beat revenue? Where's the margin guidance? Where's guidance in general? Do they have any new products? What did they say about Cybertruck? What about this Dojo supercomputer? What are the possibilities of revenue streams coming from the supercharger network? So there's a lot of stuff on that earnings call. I don't know if any one thing would actually make a difference. Did you mean like Tesla price, Manny? Where's Tesla price going to go after earnings? I'd say that Tesla. Let's load the macro here. I think Tesla can make a sharp move, especially with this RSI. That RSI is signaling to me that it's ready to make another move. It's cooled off enough. The real buying hasn't really came in yet. The real big buying. So definitely to 300. Tesla could gap up above 300 to like 310. Probably gaps above that previous resistance if I if I were to look at it a little clearer. So yeah, this is Tesla, right? Where could it possibly go? Trying to get a good picture here. We could gap up here above this previous resistance. I think if it does gap up, we go above 315, right? We gap up after hours, and then it'll say how long do we consolidate above 315, and then move up to all-time highs. There's a lot of reasons why we could be headed for all-time highs, right? Nvidia's already been there, Apple's there, Microsoft's basically there, and Tesla is destroying the competition. They're destroying the competition, especially the future expectations. Model Y, like they're just getting started. Here comes a Cybertruck to steal more market share from Ford. Ford had to cut their prices. I believe it was Ford, right? So we'll see. People just get really excited too. They get really excited about Tesla in general. Has a possible earnings move too, but I don't know I don't know about Netflix at all. Yeah, Netflix. Oh yeah, Netflix does have earnings too. NFL. Netflix has a lot of room also for the upside. That was a lot of selling there. Um, yeah, we'll see. We'll see. I'll wait till it comes out. I don't know what the estimates are right now. I mean, people have their estimates for Tesla, but again, it really comes down to how price reacts to those estimates. So what I like to do is in the after hours, like after they report, I want to see the 1 minute chart and how every single metric that comes out, how the price is starting to react to that, to get, a sentiment gauge on, did they like this? Right? Did investors like that? Did they hate it? What's going on here? And that doesn't tell me the whole picture either, because you got to wait for the actual call. But yeah, I'm excited for earnings though. I'm excited to see the bottom of the margins, bottom of margins. Maybe we get the bottom of margins. But I do I do think it's going to be important to anticipate going into earnings season. What if we reverse here? What if the S&P actually reverses? What if the earnings are bad? What are we looking at here? If we do get bad earnings, what are we looking at here, right? Where could we pull back it to? I'm gonna have to switch glasses. These glasses hurt my eyes. I need to get new ones. So let's see. S&P is 452. So for sure, if we do pull back, we're gonna retest this gap area between 442.50 and 444. It's definitely an area that we could be testing. So let me mark that up. That is a gap to be filled. And then how big of a pullback would this be? Is this significant? 1.8%. Maybe it's just a buy the dip. If we slip from there, this is the daily chart. If we slip from there, then we have a lot of consolidation here at 433. So we could be just consolidating there. And then I would say the next, we at the most, if earnings aren't the best, we come back to like 430, 431. 431 and what, 425. So these are probably the areas that S&P could fall back into if earnings turn out to be guiding worse for the next quarter. All right, looks like Teladoc is bottoming here. AMD starting to throw up, starting to barf. Yeah, I'm definitely keep my eye on that. So TDoc. See, TDoc is a 4 billion market cap. Their debt equity is not the best. Gross margin 69%. Very underdeveloped company. All right, so I am trying to keep my eye on some of these other things here. Let's see, what do we got? So the dollar is consolidating at the 99.50 level. What's going to get the dollar lower? I think earnings too. So we got to keep our eye on the dollar, because regardless of what you get on these individual names, if the dollar starts to sink further, that is more risk being put on the table. That's definitely more risk being put on the table. This is very tricky, very tricky environment. So we'll see how this plays out. What else do we got in the pipeline? And then I want to check real quick. What is the market expecting? Is the market expecting, or what does the hiking look like? Let's look at that CME data. See what the market is pricing in for hikes going forward. FOMC meeting is literally in 8 days, so it'll be next Wednesday. The next rate hike. 97% chance that we hike rates. Actually, remove this. %97 chance we hike rates. And did that change from last week? Let's see, 1 week ago there was a 7% chance. That's it. Oh, no. That was a month ago. I'm sorry. That was a month ago. So a month ago we had a 74% chance. So from a month, so going forward, a month ago the market was anticipating a 74% chance. So over the past month, we've increased the chances of a rate hike, or the market is anticipating a chance of a rate hike, and we're still making new highs. Very bullish. In September, the market is expecting a pause following that hike. In November, same thing. December, so to end the year, it's just expecting a pause. Going into January, that's where the market starts to look at cuts. Let me see. By March, it is expecting a rate cut by March of next year. So that's the first rate cut the market is actually pricing in, for the most part, is next March. Well, really January till March, but we could get some data that suggests otherwise, and I think that data is going to have to come from the. It's going to have to come from inflation, really inflation data. It's going to have to come from the inflation data, and so far, trueflation. See, where's that trueflation at? Trueflation tells us. Let's see. So far, trueflation is tracking inflation at. See, what are we at? 2.25%, pretty much at Fed's target. And I think that's like 10 million data points, something like that. Or is it 10,000? 10 million data points. See that mythology. It is 10 million. Okay, so trueflation. I know like there's a lot of people say you can't trust the government, can't trust the Fed's numbers, but we have a blockchain system that actually tracks inflation. And it's called trueflation. Oil is starting to jump. Uh-oh. Is it? Let's see. I could put it on this screen, huh? For sure. It's above 75. Where's pack of lettuce at? Oil looks like it found a bottom. Yeah, that was a clear bottom at 74. Got to be careful there. The Qs are finally starting to break the opening high. SPY just grinding higher. Wow, what a strong market. I want to see what other stocks are starting to move now, because I've been focusing on these exponential, these big trend stocks, right? Teladoc, Zoom, Roku, obviously Tesla, AMD, but something is moving in the market. It's something is moving a lot, unless it's just the indexes. Dow is moving a lot. Dow is moving up. Man, this is so bullish. Goodness. Just very bullish price action here. All right, so what was I looking at? Oh, the methodology for trueflation. So trueflation tells us we're at 2.5%, or 2.2, 2.25 inflation, and that's a big catalyst. Trueflation offers a more reliable view of inflation, contrasting with government metrics that have outdated methodologies and limited transparency. With over 10 million data points, it updates daily and has a dynamic methodology that responds to global market conditions. So, wow. So 10 million data points that updates on a daily basis. I'm going to download the actual metrics. This is part of what blockchain can do, right? So if the real inflation rate is that low, that's probably leading what we're seeing, then hey, there's no inflation. Why are we in a bear market? I mean, why do people believe we're still in a bear market, I guess? The only other factor I would say is probably, oh, we're gonna growth is gonna collapse, but just not a good argument, because that's when the Fed usually steps in. Why are the housing how do you say, why is home builder sentiment moving higher, right? Why are the home builders excited about building more houses if that's the case? Tomorrow we get building permits, more housing data. This will all come out on the macro report, so we can show that, hey, that housing is still moving up. All right, there goes AMD a little bit. Thursday we get Philly Fed manufacturing, new home sales. All right, cool. All right, anything else on the pipeline here? Let's see. Any breaking news? Any breaking news that we're seeing here? Trade Netflix and Tesla earnings. Oh, yeah, right. Saudi Arabia and Turkey include corporation. No, I don't care. Well, we could look at CNBC and what they're saying and some of these stories. Pull up some of these stories. All right, so that's S&P. Let me get down here. Dang, the S&P is strong. And so here comes oil. Yeah, man, if you're shorting oil, be careful at this point. We're above the 75 level. This is the big level. This is level 1. This is I call this R1, so resistance level 1. Number 2 is going to be at 83.50. that level we looked at the beginning of the year. IWM is actually rolling over. Maybe the rotation's coming back in. Microsoft's chat AI bot now lets you search using images. How does that work? This was just new. So users can now upload a photo to Bing Chat and ask for more information on it through the desktop. Oh, wow. Bing can understand the context of the image, interpret it, and answer questions about it. Whether you're traveling to a new city or a vacation and asking about the architecture of a particular building, or at home trying to come up with lunch ideas based on the contents of your fridge, upload the images into Bing Chat and use it to harness the web's knowledge to get your answer. That's interesting. That's kind of, well, I don't want to say it's kind of dangerous. We all know that, but imagine you upload somebody took a picture somewhere and they're trying to stay anonymous, and you literally ask the chatbot, "Hey, where is this so I can find this person?" And it tells you, "Oh yeah, that's the museum in Southeast Chicago." MU is gonna bounce. Looking at MU. Why MU though? MU is Micron is don't they still have that what was it in China? They basically said in China that they're unable to provide chips in China or something. I don't remember what it was. Dang, the Qs are exploding right now. Wow. Sheesh, what is hitting the market? Oh, I'm sorry, I don't have MU up here. Here, I'll throw MU up. MU doesn't look too bad, but wow, just grinding higher. People are pissed off. They want to know what is pushing the market up. Recession fears basically dissipating. Zoom back into that 73.50. That's looking solid. Qs are marching. Oops. I wonder if the Qs, let me see. Let me double check. Are the Qs? Oh no, they're not there. Okay, Q. I thought the Qs were breaking breaking the highs. Qs are not there yet. Testing the highs though from a couple days ago. Oh, are you talking about Nvidia? My bad. I didn't even look at Nvidia. I'll throw up Nvidia. Left hand side. Yeah, consistency is definitely progress. Nvidia does have a nice uptrend here. Check out the 4-hour chart. Nvidia looks like it's going to break out again. The Qs are, whoa, the Qs are just ripping right now. You got a rotation out of IWM, out of the small caps into the Qs. The Dow also is moving up. Advanced decline is starting to roll over. So some stocks are selling off. I don't know who it is. And then others are bidding up pretty strong. Let's find out who's really moving today. Rivian. Rivian's up a lot, huh? Oh, Schwab. That's why somebody said Schwab earlier. KRE's up. Carvana's up. Morgan Stanley's up. Is this Citigroup? Okay, there goes. AMD is really starting to hold that level. Citigroup. You got Citigroup. Oh, shoot. Get rid of that. You got Citigroup showing a nice wedge pattern too. Let's get back in here. Dang. That's probably what shot the Qs up so much is NVIDIA. Bank of America raised to 550. Also, they got raised yesterday too. So people are raising their price targets on NVIDIA. NVIDIA pressing that pre-market high, which was the previous support. So that's a big zone. What is this, 469, 470? Yeah, 469, big resistance on NVIDIA. I'd even say 469.50. The Qs are just ripping, so is the S&P, the Dow. Wow. But yeah, Rivian. So this is NVIDIA. Check out Micron. I know that person wanted to look at Micron. Micron still kind of weak. I just China. Micron has some tailwinds, some headwinds for China. Chinese headwinds. So when Micron did try to break out, it hit the, I think it was what happened? China basically suspended Micron, some type of legal action against Micron. They're unable to put chips in. Let's see. Okay, it was an export ban. I knew of something. I don't remember exactly what it was. Either way, that's why, on a trend basis, yes, Micron looks pretty solid on a trend basis. Could be a nice swing trade. That's a perfect bull flag. It's a very nice bull flag on Micron. So yeah, you keep your eye on Micron. Looks pretty solid. AMD is still trying to get past this level. A nice cup and handle though. It's pushing off that level. So I'm liking it so far. Still watching Teladoc and ZM. Oh, that's who it was. Citibank, or Citigroup with the earnings pretty soon here. Citigroup, nice. Dang, this thing's just been moving in a range for a long time at the lows. Target, yeah. Can you see? Are you guys? Can you guys see on the Bluetooth? Because I'm thinking like, man, you can't go say what's up. Give me a shout out on Bluetooth if you guys are on there. Go click it real quick. Go give me a shout out. Say what's up so I can see your name. Yeah, TGT. Let's look at TGT. We got Target. We got to call out for Target. So what is Target looking like? Let's see. Let's throw on that weekly chart. Actually, the macro weekly chart. Who's that? ZM? Yeah, come back down a little bit. Don't jump on me first. So Target, let me clear this draw set so that it's not so, there's not so many things on here. So we can clearly see that you can clearly see Target. Let me go to the weekly actually. You can clearly see Target had dropped the previous support. And it pretty much got crushed based on some political stuff. Now, I don't think Target is done, right? Yeah, that's pretty clear. I don't think Target is really just a trash company. Price tells you there's a little more turbulence that they're probably gonna have to fix on the earnings call or some type of announcement. But for the most part, Target still is a solid company. It's not really gonna change. People are still, gonna shop there. They're just not going to, and I'm talking about the brunt of it. They're just not gonna, play into this political stuff. So Target, what is it looking like? Well, it is supporting the previous support, right? Way back in, it has shown support back here. What was this? December 2019. Dang, it pulled back all the way to 2019. So there's your target look, right? It's below the moving averages, a lot of downside momentum, could roll over again. It doesn't look great. I really don't like this target. This target chart. Let's go to the daily, see what it looks like on the daily. But you could get momentum here, William, if target can hold this line and then eventually, bro, why isn't my mouse working? And then eventually break this downtrend. The price action just looks gross though. Uh-oh, AMD is showing some momentum there. I can see it. I recognize that price action. So once it breaks out of this this downtrend for target, it needs to break this downtrend and then get past this resistance level 138. So I don't know. I would wait on it. I would wait on it. Unless you're looking at a long-term hold on target, then yeah, target will be straight. It's holding that level. Your stop is at 130, pretty much below 130. And it's a hold below 130 for target, a hold below 130. Not just a slip, but if it consistently holds below 130, then that last line is at 125. But I wouldn't even, if it can't hold 130, I'd be out. I'd be out under 130 or even more. If we look more micro, it's not even 130. It's the last couple days. Man, this price action is nasty. It's really hard to tell. It's really hard to tell. 130 is just the whole number. So that was the gap that it closed yesterday. I'm going to stick with 130. If it holds below 130, then that next line is 125. But yeah, target still in a downtrend. Could be a nice catch-up trade in the future. But remember, consumers are starting to slow a little bit. Services have a little more juice. Services have a lot more juice than these retail stores. These retail stores are really starting to slow. And Teladoc, the reason I like Teladoc is because everybody needs services. You're always going to need healthcare. And if they can use AI, they're using that Microsoft AI stuff to increase their productivity. That's going to be a big boost here. And that's a nice wedge here, Teladoc. Look at that wedge from the downside. It's above, it almost got above the 200 moving average. Got rejected. We'll see. 135 is the box. Yes, 128 support. On the woke list. Yeah, William on the woke list. It's on the woke list for sure. Any other plays we got here? Oh man, you can't even see. My bad. I was in the way. I was literally in the way, wasn't I? I'll have to move the chart over. This is usually why I use the trading view because of this issue. Sorry about that. But ZM is holding that support. I might actually be getting long ZM here. So if we look at ZM, right now that I know I'm in the way, I'm gonna have to move this chart over. There we go. Actually, no, I'm gonna move myself to the left-hand side while I do ZM. There we go. All right, so looking at ZM, Zoom, a lot of potential. So if you're out there saying, well, what is this guy, what is his trade ideas? This is free. This is basically free. And I'm looking really far out, but ZM has had, Zoom is one of those companies that can really do good when rates come down. Dang, AMD is starting to push up out of that trend. I like that. Trying to decide whether I should enter another contract on AMD or just let it run from here. Nvidia might be pushing it higher. So we're finally above the daily moving averages, all of them. You might get a triple golden cross here. We're waiting for the triple golden cross where the 50-day crosses above the 100 daily moving average and the 200 up here. But for now, and let me clear this up. Let's clear this draw set. Okay, so right now I'm looking at this clear zone here that we just got above. So this was a previous support over here, which was back in February of 2023. We supported that a little bit, and then we got above it for a little while, and then we got slammed below it. So that's basically the zone, the line, right? Rejection, rejection, rejection. Got above it, got rejected, 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 and then all of a sudden we break through it. So we're finally through the 72 level. Let's just call it 72. And the longer we support that 72 level, we do have some more resistance here. But the longer we support that, the more confident I am that this ZM is going to start to move here. See, is there a gap to close at 74.50? 74.50, I would say, is that next resistance level. So as it breaks these levels, maybe start adding to the position. But I like this. I think the momentum's starting to turn up. I see the momentum starting to turn back up. It sort of, I don't want to say it looks like Open Door. It looks like a lot of stocks, but Open Door did the same thing. And Open Door is now starting to catch a bid. Got up to 525. Good company here. There's a lot of names that just really sold off a lot. We also have Twilio, Twilio is a really good AI play that most people don't understand with APIs and basically AI with APIs. And you're getting the golden cross on Twilio. A lot of resistance at 78. But you're getting a golden cross on Twilio. It did break the downtrend, the immediate downtrend. And then it held that downtrend. So Twilio looks really strong. I believe Twilio is now working with Amazon. You got me right, Amazon. There he goes. Q's Q's new 52-week highs. Who the heck is moving in here? Is this Rivian? Oh man, Rivian. Hey, look, I'll just say in the short term, Rivian looks set to really explode here. Rivian really looks set to explode here. On semiconductors. Oh, Brian Zerb. What up, Brian? Tesla and Netflix earnings tomorrow. Are you covering the earnings? I believe so. I'll probably do a short morning session, then come back and do the earnings. Let's see, what time are those earnings at for tomorrow? What time are Tesla earnings at? Because you have earnings and then you have the call. A lot of people are going to be streaming the call. Yeah, I think we'll do it. We'll do the streaming. But anyways, yeah, Rivian. And if Tesla takes off, Rivian could be another proxy for that to move higher. Since I mean, I don't really know too much about Rivian, so I'm not going to get too hyped on it. But if this momentum does carry forward, that's what I'm saying. If the momentum sticks around, because you do have a golden cross here, now it's looking for more momentum. I don't know if we actually get that momentum. Man, the indexes are moving a lot more than I think the individual stocks, though, from what I'm seeing here. Let's go. Let's see. What are we seeing here? Rivian, Schwab, Microsoft. I missed that one. I missed that. Microsoft at 360. Is Microsoft hitting all-time highs now? Yep, Microsoft all-time highs. So now we have the big mega caps basically all at all-time highs. I mean, the big ones, Apple, Microsoft, Google's not there, Meta's not there, Tesla's going to get there pretty soon. Google, Amazon still have some room. So out of all the mega caps, we have Nvidia, Apple, and Microsoft all-time highs, all AI. Well, I guess you don't want to say Apple's an AI play, but they have more. They're more than just AI. They're cloud computing. Microsoft is cloud computing, deep learning, machine learning. Hold on real quick. Okay, so I'm seeing Microsoft news move in the market. Yeah, that's probably what it is. I didn't even see Microsoft move. What is the news here? Also, the reverse repo starting to drain, guys. I still think when it's all said and done, we're gonna see Tesla take a big move. Oh, this is Nvidia. What am I doing? I think when it's all said and done, we're gonna see Tesla make a big move. All right. So what is going on here with Microsoft? Holy smokes! What talk about a move? This is a $3 trillion company too. That's a big move intraday. All right. So we do have. Let's see what's going on here. Let's figure out what's going on with Microsoft. Oh, so that's what was pushing up the Qs. Okay, I was off. Brian, on semiconductor. Yeah, let me go through. Let me throw on my other chart because it's kind of annoying to use these charts for the bigger term moves. See on. Whoa, dang, dude, on exploded. We were near all-time highs. We've been grinding a lot higher on semiconductor. That thing is you just got to catch the trend at this point for on. In my view, you got to catch the uptrend. When it pulls back into the trend, which I will throw on the chart pretty soon. That trend support is like what, 98? Somewhere around 98 for ON. So what do we get here? What's going on with Microsoft? Is it the Activision Blizzard deal? Is it that Berkshire Hathaway disclosed a 1.9% stake in Activision? I thought they were pulling out. I thought I heard Berkshire was pulling out. Microsoft Activision reportedly seek contract extension, a $69 billion deal to set to miss the deadline. This was way earlier this morning. People are okay. KeyBank Capital raising price target for Microsoft. Healthcare automation. Man, this might be big for Teladoc. That's what I'm looking to make. So what is it? This is just the deal? Is this just the same stuff we've been seeing for a while with Microsoft? I don't know if there's anything new here. Maybe I'm missing something. Businesses will have to pay $30 per user per month for accessing the Copilot AI program. So is it just the release of their subscription fee? That's what it looks like. Microsoft via Azure Llama model will also be available for free via Amazon Web Services. I forgot. Meta's coming out with Meta's also coming out with the chatbot with the generative AI. So it's going to continue with more than 1 million humanoid annotations. Llama comes, and still you also have Elon with the Twitter algorithm. What's he doing with the Twitter algorithm? He could be creating his own chatbot too, based on the Twitter usage. So the Copilot AI program, they're basically giving the prices out for that. They just got upgraded by UBS also. Wow. So deal of changing $30 for the company and business. Okay. I wonder what it was. Did they just not talk about this before? Did they just not talk about this before, or are they just releasing how much they're gonna charge subscriptions? And man, their earnings per share just keeps going up. That's just gonna add on to their EPS. Look, this is just man, this is gonna really push this bull market higher. Like I said, the Qs go to all-time highs this year. Just too many things on deck, right? And what you really get is okay, Amazon or Microsoft's AI story isn't, it's not just, oh, they're just coming out with the AI. You also have Teladoc who are actually going to be using it to increase their productivity and to lower their costs and to gain more market share and to make the user experience better and to create more demand. So literally we're witnessing AI convert into more productivity that helps earnings growth. Has it translated yet? No, but we look at the expectation of it. You also have, I didn't even see that MongoDB expands partnership with Microsoft to support cloud adoption. Dang, Microsoft all-time highs. and they've been cutting a lot of jobs. So I'm telling you, earnings. I believe earnings will come out better than feared. Dang, look at that pattern though on Microsoft. What a wedge. That's what you call a wedge pattern right there. That's a nice wedge pattern. We'll see how long this can last. So yeah, going back to on. I don't know if you're still on here, Brian Beezer, but looking at on's been chugging along pretty good. It is not now starting to expand. This is why the AMD trade is going to work at some point. But for on, it's in this nice little uptrend. And you really just got to catch it on the downtrend and the pull back into the trend. Maybe like 97 is that next level. But yeah, I would never chase anything like this. But if you do want the on, I mean, it's already gone, right? It's pretty much gone already at this point. It's broken out. Yeah, on it is breaking out. Or not on it, but on AMD. Let's see what else AMD still hasn't moved yet. So now looking, you also have Amazon with Amazon also has their AI that they're doing. So I just think these stories continue to develop better and better, right? Amazon, Google, Facebook, Tesla, Nvidia, bringing the indexes higher, and then eventually, so Llama's going to be big. What is Meta even moving off this? Almost okay. Did they talk about it? Oh, this is MetLife. What? Not MetLife. Meta. Meta says Llama 2 comes with an acceptable use policy that bans uses of including violence, terrorism, child exploitation, and other criminal activities. Okay, so they're putting some restraints on their generative AI chatbot. Yeah, for sure, Brian. Yeah, on it. Dang, I can't believe how much it already moved. That thing has been moving for a while. I remember we looked at it like a month ago before it had broken out. Now it's really up there, but I would say yeah, that pullback in a 97, and you get that support with the market supporting, because ultimately what you could be getting here in the overall market is where we get to the all-time highs and we just keep blowing past them because people get a FOMO. They see those big blow off tops. Recession is nowhere to be found. Fed is at pause. Inflation's coming down. Same story. We just keep saying the same story over again. And I'm playing these catch-up trades. Not playing these catch-up trades. I really want to play these catch-up. Come on, dude. There we go. T-Doc. How much does that play into T-Doc here? How much does that play into Teladoc? July. Oh, Kathy Wood hasn't bought Teladoc for a while. Hmm. And we really do have the Qs moving up though on this news pretty strongly. S&P, goodness sake. This is all before earnings. Maybe we have a huge blow off top. Kathy likes Path. Oh yeah, Unity. Is it Unity? I have more orders in for T-Doc. Just have to see if it fills. Okay, cool. Big man's coming. I was gonna look a little bit into it. Thoughts on Nvidia? Is it a good investment stock? NASCAR. Um, I think Nvidia's up too much. I'll tell you that. I think it's priced pretty accurately at this point. Um, I think it's priced pretty accurately, Nvidia. So it could be, but I don't think it has the most upside. So Nvidia, will it keep going up? Sure. It'll probably go up a lot more. I could be 100% wrong and it doubles again from here. But if you are going to invest in Nvidia, you want to get in on a good price, right? On a big pullback. So Nvidia is at what, 480. It could go higher from here. Probably does go higher from here. So as an investment, sure, yeah, but I think there's better opportunities in Nvidia, in my view. I think it's pretty fairly priced, is what I would say. They had a really good earnings report. Expectations are high for Nvidia. And hey, maybe I'm wrong, but I'm just thinking in terms of probability, they had very good expectations. The expectations are very high, so it's going to be tougher to beat that. But definitely Nvidia is going to be a good investment. Like if it pulls back a lot, if it does get crushed at any point or come back into this trend back to like 440, great. But what's your time horizon? That's always the question. What is your time horizon? Some people it's next month, it's 2 months, it's 3 months, it's 10 months. You got to know what your time horizon is before you really get serious about something. Big man's coming. Kathy covers PATH. Let's see what path looks like. Guys, I'm thinking about moving the stream 30 minutes. It looks like we get a little more traffic later. I think we might move the stream up to, I'm just doing some adjustments here. A little more time to prepare and give people time. So we might move the stream up to 7:30. I'm gonna try that either tomorrow or next week. I'm gonna move up to 7:30. Oh, I'm sorry, 7:30. That's not your guys' time. That is gonna be 10:30 Eastern time. So pretty much after the pre-market, I'm sorry, right after the opening trades happen. So this is 10:30 is when everything starts to slow down typically, right? So 10:30 to 12:30, we're basically the slowdown period, session 2, people go to lunch, things are a little slower, and then boom, you go into the closing bell after that. So I might be extending that, just to FYI. So Unity, hey, this thing Unity man, they all look pretty similar. Unity is starting to come up. UPath, is this another AI? This might be an AI play, right? I'm gonna switch these out. This hurting my eyes. I need to get a new prescription. Kathy owns UPath. Yep. Buffett buying Capital One. QS and NU. The heck is going on with this? All right, cool. So got that in line. Fund manager investors are still net 24% underweight global stocks. So this Bank of America research shows, what are we looking at the Qs over here? Yeah, we're looking at the Qs. This Bank of America research shows that fund managers are still underweight stocks, 24% underweight global stocks. Note the contrast between Bank of America fund manager survey global institutional positioning versus U.S. individual positioning. Okay, that's interesting. So net percent of Bank of America fund manager surveys for global equities is still negative 20%, but the sentiment for the bulls is at 20%. So this is a really good chart, because what it shows is that U.S. investor sentiment is a lot higher. It's very positive, very bullish, but when you look at global fund managers, they're still underweight equities. And what does that really? What does this say? I'm going to take a picture of this. I'm going to put this inside of my macro report. What it really speaks to is that you have retail investors who are very bullish on stocks, but professionals are not. Professionals are not. And that is usually a bearish sentiment indicator. But if you do look over the past 15 years, retail investors have been, or 10 years, retail investors have been outperforming a lot of fund managers, not on the down cycles maybe, but on the up cycles, because they're taking more risk in the riskier names that are paying off. Apple has paid off, Microsoft has paid off, Tesla has paid off, Google has paid off. And those stocks, a lot of, well, maybe not Apple, but a lot of fund managers say, oh, this is too overweight. But the truth is the monopolies, the best of the best, usually just outperform the best. It's just picking them, which becomes tough. Yes, the 10-year, 2-year curve is inverted. Yes, it's led to recession each of the 5 prior occasions. The prior 2 inversions were S&P sell signals, but the 3 occasions before that were buy signals. Interesting. I never seen this. So this guy is saying that the S&P or the inversion is actually a buy signal, or it has been a buy signal in the past. Another very interesting chart, huh? Okay. Okay, AMD supporting VWAP, ZM supporting VWAP. Definitely got to keep note of this. This is a very interesting chart here. Oh my goodness, the Q is just breaking out again. Wow. What is Tesla looking like? Tesla getting carried by this into earnings? No, consolidating. Nice. Tesla secures $313 million contract for Megapack energy storage facilities in Massachusetts. Yeah, we still have revenue for that from energy storage. There's so many revenue streams for Tesla that just haven't materialized yet. The expectations are going to take this stock a lot higher if they keep executing. So you have mega battery pack, you got solar panels, you got obviously Model Y, you got Cybertruck coming in, you have the supercharger network, you have full self-driving, which is the biggest, taxi networks. And you have the Tesla skateboard, you have Tesla insurance. There's so many lines that just haven't hit yet that I still think when people say, "Hey, is Nvidia a good investment?" Yeah, sure. But I still think Tesla's the best stock in the market in my opinion. I think that is the best stock in the market because times are changing. The innovation curves are starting to change a lot. And this is really good. I really like this consolidation on the stock for Tesla right before earnings. Really good consolidation. If it was just shooting straight up, I'd be a little worried. Oh no, but I want to see consolidation. I want to see a little bit of what do you say? I want to see some hesitation. And then when those earnings come out, boom, people get long. Because if it just goes straight up, people might chase it or they'll just wait and then you'll get a sell and then it'll look choppy. But the consolidation is really good. Okay, there goes AMD. Starting to break out of that range. Teladoc, ZM. Well, that's what I'm looking at. I'm looking at Teladoc. I'm looking at Zoom. I'm looking at AMD still. Obviously Tesla. I'm keeping my eye on Roku. I'm keeping my eye on Roku. I got stopped out last week. All for longer term plays. And then let's see what else are we missing here. And then obviously Ethereum, Bitcoin, Chainlink. Oh, wow. Okay. So this guy says, oh, yeah, this Tesla that we're looking at, huh? Let's switch over to SPY. Dang, this thing just keeps grinding up. How is this not a bull market, man? Just eating away the shorts, especially the Qs. What do you got? Netflix plus the Mercedes deal 10 days ago. Yep, there you go. Big man's coming. I don't know much about UPath. I got to look into that. I really got to look into UPath. Unfortunately, I've never looked into UPath. I was like, oh, another. She's pretty thick though, right? On UPath. They're pretty thick on UPath. Netflix. Yeah, we'll take a look at Netflix. Did you say Zoom was dumping? Yeah, Zoom was dumping. Right back into that. I think supports at 72.50. So see if it can hold there. UPath and Unity Software. Those are two different companies, huh? Are they the same thing? I really haven't looked at this. I know she's big into Unity. This company's bigger than I thought it was, though. You're buying equity on UPath, two different companies. Okay, yeah, that's what I thought. I thought so. I was like, wait a minute, is that the same? What is the ticker for UPath? What is the ticker symbol for UPath? Big man. Netflix. I expect Netflix to do pretty well. I think Netflix will do good because, those user descriptions, I mean, not user descriptions. Let me just tell you a little story. Even though that they are eliminating password sharing, they initially thought people would get pissed off and drop the service, but people are addicted to Netflix. They're addicted to Netflix, especially what just came out. They're kind of woke though. A lot of the shows are kind of woke, and it's kind of like, ah, bro, let's get back to the originals. Um, what just came out on Netflix? The big story that was woke last season. Nobody's even watching these seasons anymore. I tried to watch it yesterday, and it was just trash. I was like, oh my goodness, bro, where's the real story? PATH. Okay, path. So Unity is not that path. See, Path is $10 billion company. UniPath. What is UPath? What do they do? Automation platform that offers a range of robotic process automation. Okay. And they're multinationals. Okay. Romania, Japan. Build, manage, run, engage measures, and this is the automation world, right? The future of automation combines artificial intelligence with desktop recording, back end mining, and both human activity. Wow. Sounds like a whole lot of goodness there. So UPath, $18 stock, software infrastructure, no debt, nice. Gross margins 83%. So I need to check out. I need to do a little deeper dive on UPath um, versus Unity software. What is the big difference? Are they both software infrastructure? No, one's application, one's infrastructure. Infrastructure is always really solid. Infrastructure is always a solid bet. Wow. I kind of do like the just taking a bird's eye view on UniPath or not UniPath, Unity software versus yeah, UPath. I think the what looks a little more attractive is UPath because it is an infrastructure. Their EPS actually grew. They did get downgraded in June by Wells Fargo, but their revenue is going up pretty high. Not pretty high, but their revenue is continuing to grow significantly. They're almost near positive EPS. If they get positive EPS, it's going to be big. Definitely big growth stock. Definitely a big growth stock here. There goes Zoom. Look at that. Zoom right off that level. Big man's coming. Do you see that big candle right off that 7250 level? That's the level we've been looking at. Oh shoot, I didn't even realize that we're still on this chart for Netflix. Netflix is breaking out. Look, Netflix has a gap to fill at 507. I hate to really say this is a good bet because I really hate to say that because I don't want to be wrong about something I'm not completely confident in. I mean, Netflix is a buy, but I still think Tesla's a better deal going forward. And honestly, Netflix has a lot of woke shows. I think HBO might even have better shows than Netflix. Netflix has a lot of variety, though. Don't get me wrong. It doesn't matter what I think, right? It matters what the whoa, that is some big buying. Whoa, Zoom just got a big buy. Zoom just got a big buy. So I think this is the confirmation I was looking for, which is we got the break above that 20 level. I'm sorry, 72 level. We got the pullback, the support on that level. And then if we zoom in intraday, we just got a big green candle. Okay. Big green candle off that level, off that 72 level. So there's buyers coming in. Got sold right away, but there are some buyers on Zoom. This might be my time to add here. We haven't even gone over market commentary. Microsoft trading higher after announcing AI chatbot pricing. Cool. Definitely a lot to cover here. 40 million, that Meta's 150% rally keeps going. Dang. Uber, I don't like Uber, don't really care. The setup on Netflix. All right, somebody asked about Netflix. I'm gonna throw in CNBC because I need to do some scaling in here on some of these names. I'm looking at Zoom. I am looking at AMD. Keep my eye on Teladoc. Not really Roku. I'm already pretty much sized into Tesla, so I'm just waiting for Tesla earnings. But yeah, some people asked about the Netflix setup. I'll definitely check. We'll definitely look into that. And then here we have, okay, what is that? Zoom, Unipath. Dang, there's a lot of stuff to look at. UPath, got to look deeper into that. Automation. That might be better than SYSS. Stratasys. The Stratasys is looking like. But Stratasys has been moving up a lot. Computer hardware. Is this really the best 3D printing stock? 3D printing solutions? I don't know enough about this stuff. It's really complicated. I have to read some articles. Let's see if we can download this stuff. Seems like tech is going to get wrecked after earnings get rolling. Oh yeah, QS. I didn't even see QS. What is QS? QS. QuantumScape. What makes you think tech is going to get wrecked after earnings get rolled? Earnings get rolled, earnings get rolling. What makes you think that? Is it because the run up? I mean, yeah, we're seeing a big run up in tech before earnings. So it's kind of like buy the rumor, sell the fact. The problem is the rumor is that earnings are going to be lower than expected. Could be though. It could be. We are running up a lot faster than I thought we would. But like I said, Q's at all-time highs by the end of the year. What really gets people to think tech gets going? Microsoft deal. There's a lot in the pipeline. There's a lot of upside in the pipeline. So these are the Qs. IWM. Also, you got DXY breaking down. So many things that are happening. The dollar might hold a little bit here. Man, it looks funny on these charts. Crude oil is what we are a little worried about. Is it starting to bottom? Could be. Could be starting to bottom here. Definitely looks like we'll get more people in the afternoon, so I might start the stream a little later. Well, Zoom, big upside buy and then sell off. See if it holds. Still waiting. Correct companies are coming from being wrecked and they're making cuts to adjust. Yeah, I agree. Microsoft made so many cuts and now they're gaining more revenue. Their margins are going to just be better. I think this is the bottom of earnings. Earnings season, this is probably going to mark the bottom. I think people just see prices going up and they think this is too good to be true. It has to pull back because I'm not in. We have to pull back, right? That's what people think psychologically, that the market's up too much. With how could the market be up this much with all the negativity with the Fed hiking rates, but not understanding the full context? Not understanding the full context. Now, hey, is there a chance that stocks really do rip lower? Yeah, you got that chance too. But is that the probability? Not if this is the bottom. of earnings. About to get in Zoom soon, waiting for that price target. Oops. Yeah, Qs are just scraping higher. Let's see. Uh-oh. Lost our camera there. It's okay. It was at 2 hours and 30 minutes. But look, Zoom is pulling into the 200 moving average and the 7150 level. So still got room here. Here it is. 7150, 200 moving average. Somewhere in this zone. You'll see a bid. You'll see something hold. Yeah, S&P 500. I'll keep you guys updated on the scorecard, which is the earnings expectations. We'll keep our eye on that because this is going to be a big earnings season. We start with Tesla tomorrow. We will we'll stream Tesla earnings. A lot of stuff in the pipeline here. Oh, you know what? Some people are talking about PayPal. Let me take a look at PayPal. PYPL. Oh, is it because it had broke that downtrend? I guess that is a big risk reward right there for PayPal. Back to 300 possibly. Man, yeah, PayPal has a lot of upside. PayPal has a lot of upside. Probably the Bitcoin cycle, I think, took it much higher, the crypto cycle. Looks like Zoom's going to test the bottom of that range at 70.61. You got I don't know if that's a gap to fill. But was that a one? That was a nasty capitulation. I have to wait on that. Either way, I mean, we're early cycle. If you're looking out far enough, we're in early cycle. So yeah, PayPal, what a monstrous sell-off. I think it's definitely oversold. Looks like that trend is starting to, it's testing the 200 daily moving average. Trend is starting to be tested. IWM. See, IWM is back at the top of the range. Well, tomorrow's a big day. Tomorrow we're really gonna see if price action has went up too much in earnings because it has elevated a lot. I was hoping for more consolidation, but price is moving up fast. But again, if this is the bottom of earnings, people are just getting excited, right? Fund managers might get a little more exposed because they're in cash. So there's not a whole lot of sellers here. There's just shorts, short sellers. You'd have to short the market. Not a whole lot of sellers. Lost it fast too. Yeah, it came down quick, bro. That came down really quick. Now, let's say earnings are they're kind of mediocre, but the Fed cuts rates, inflation comes down, earnings come down. Well, rates come down, then you have your more commodity plays. You have Tesla, right? You have Tesla, you have not Tesla, I'm sorry, you got crypto. You got Bitcoin, gold, whatever, for those second term plays. Tesla earnings tomorrow. All right, what do we got in the pipeline? What do we got coming up tomorrow? Whoa, what the heck is this? Didn't mean to do that. So tomorrow we have retail. No, we had retail sales this morning. Those came out weak. Tomorrow we have building permits and housing starts. So we'll see where the housing market is. Can the housing market continue to grind higher? Can we get that grind higher in the housing market? S&P is now at that. I don't even know if that's resistance for S&P, to be honest. Probably not. Appreciate it. Big man's coming. Yeah, it was a big overreaction for sure. There we go. Let's make this a little bigger. Is this Netflix earnings? This is Netflix earnings here.
There's a stock, $460, better than 2%. Jason Snipe ahead of earnings. What are your expectations after a run like this?
Yeah. And I mean, you said it off the top, right? It's up 55% already year to date. So for me, all it says that is password sharing is working. Ad support tier is working. Free cash flow is growing. They have a really nice, in terms strategically, as far as how they're positioned. 60% of their business is done overseas. So when I think about all that's going on with the strikes here in the U.S., I think, the comps are lower overseas, but it's still an opportunity for them to grow elsewhere. So I don't think they'll be affected as the other streamers will be. So I still like it here into the print, and I think we'll see strong growth also in ARPU as well.
Yeah, I mean, you're not the only one. Wells, Josh, reiterates Netflix overweight. Jeffries reiterates buy, takes the price target to 520. You have to believe that some of Disney's pain, in maybe more ways than one, is Netflix's gain. Certainly from a stock standpoint, these things have gone in opposite directions.
Yeah. Well, look, Netflix obeyed market-based signals. This is a really interesting concept. Meta did the same thing. Your stock price is telling you what people think of your strategy. And when you reverse course and you say, okay, you know what? We said for 10 years we're not doing an ad supported. We don't think the viewer wants to see ads during our content. We think it's antithetical to our blah, blah, blah. Then they're like, all right, we're thinking about it. You get a 20% rally in Netflix. Don't just think about it. Follow through. The market is telling you that's the strategy that's going to work. You know why? You might be smart, Reed. You might know a lot about entertainment, but the people who own your stock know about investing, and they understand cash flow and profitability, et cetera. So Netflix obeyed what the market was telling them to do, and it paid off, and it's still paying off. I'm waiting to see Disney follow suit and pay attention to what the market is telling it, which is that the current course of what they're trying to do in streaming is not what investors want to see them do. So this is an interesting case. It worked. I was in Netflix. I played the bounce. I sold it too early. Story of my life. I still think the stock has room to the upside.
You didn't feel like hanging around anymore waiting for Disney, did you, Steph?
No, I really didn't. And that had to do with Hulu that they want to go after. It sounds like that they want to go after the remaining piece that they don't own. I don't think that they should. I think that there's other things they've got to fix. And then they talked about cost cutting, and then they're cutting content costs. So which definitely is not what I wanted to hear. So it's the Hulu and the content costs. And I just think it's going to take time. I think it can get fixed. And I think parks can definitely get fixed. But for me, I just think there's way other investments that I'd rather own.
Do you think they're gonna sell ABC and linear TV to fund buying the third of Hulu that they don't own?
It's entirely possible.
Who's the buyer for
I have no
ABC?
idea.
Like in real life, who is the buyer? Nobody.
Would be private equity.
Private equity, not a strategic, not another media company.
I don't think so. Oh God,
Okay.
who?
I know. I don't. That's what I'm asking. I don't even know I don't even know how you do that deal. Who wants it?
I don't know, and
Thoughts?
I don't want to wait 2 years to find out.
Yeah.
Okay.
Yeah.
All right, we'll take a break. We'll take a break. Because straight ahead, Messi Mania in Miami. World Cup champs' big U.S. debut just days away now. We've got Jorge Mas. He's the managing owner of.
All right, cool. So that was the Netflix take. I guess a lot of people upgrading the stock. This is going to be tough. This is going to be tough because a lot of the technology names are up a lot. So you either get more of a short squeeze and a chasing after earnings or during earnings, or you get a gigantic pullback. So that's kind of the bet, right? Consolidation, does it happen? Maybe if you get a rotation into the Dow, which we are starting to see. Dow's finally starting to break out, by the way. The Dow is finally starting to break out. All right, I'm going to get out of that. So you see, looking at Dow, let's take this off. More buy on Toast. Anybody buying Toast? I never heard of that. Oh, here was the Microsoft thing. Where's the Microsoft deal? They were talking about the Microsoft, what that actually means. Where is that guy at? There he is. All right.
Is a better than 4.5% up right now. Look at Microsoft. Oh, no, not this time, Scott.
No.
Actually, this is an AI headlines we're getting. Look at Microsoft share is a better than 4.5% up right now because of a slew of announcements coming out of their Inspire event over in Redmond, Washington. So basically, the big one here, Scott, is they're announcing pricing for their new AI Copilot feature. That's the AI chatbot for office apps like Microsoft Word and Outlook and Teams that kind of helps you along with those programs. It's going to cost $30 per user per month for companies that want to use that. So, for example, here at NBC, we use Office apps as well. So, for every NBC employee, they would have to pay an extra $30 per month. The market really liking that headline. In addition to that, they're also announcing as a bundled product as part of just the regular subscription for Microsoft 365. It's a new Bing Chat Enterprise. So this is the same Bing Chat bot that we've been talking about all year, but it's an enterprise version that's kind of locked down so companies can feel more comfortable putting private information into that chat bot to help them do work. You might remember throughout the year, we've heard companies like Apple and Samsung and Google banning their workers from using ChatGPT for work because of security concerns. This is designed to combat that. And one more headline coming out, a partnership with Meta for their open AI language model. Microsoft will be supporting them as well through Windows and Azure, Scott. So look at shares now up better than 4.5%.
Yeah, $30 per person. We don't get a group discount or anything?
I don't negotiate those deals. That's way above my pay grade.
Yeah, paging Brian Roberts.
Yeah.
We'll have to see what's going on. All right, Steve, thank you.
You got it.
That's Steve Kovac. Interesting news. Jason Snipe, you own Microsoft. That's a heck of a pop. You don't normally see a 4 to 4.5% pop in a stock like that very often.
100%. And I think, it goes to, for me at least, this whole AI rage, right? And now there's a pricing model, this AI chat box. I think that's just another opportunity for Microsoft. They announced some news as they're kind of broadening out their space in cybersecurity as well last week. So I think there's a lot of momentum in this stock, and it's just worth owning. It's a stalwart, and I just believe it should be a core position in your portfolio.
The NASDAQ's on pace, by the way, for its best month since December of 21. This tech run.
Remind me, how'd things go after that?
The tech run,
I don't like
the
it.
tech
Listen,
run doesn't seem to want to bait at all.
I'm in all these stocks. I don't love the setup like right this second. The VIX is now in the low 13s. The VIX is down 5% this week and is getting back toward those historic lows. I don't know if the viewers remember. You definitely remember. We used to do shows in like 2019 where people on Wall Street were complaining that there's not enough volatility to make money. Like, that's literally a thing that we used to complain about. That's where the VIX is getting back down to right now. The XLK, that's the tech sector index ETF, is at an advanced decline that is the highest level since August of 2022. Remember what was going on in August of 2022. We were in the midst of a huge snapback from a big sell-off. We're having that type of performance here, but not in a snapback from a sell-off. We're having that type of performance with these stocks back at highs. It's very, in my view, very tough to get really bullish at that kind of setup. I do think that odds are better than not you're going to get a little bit of a pullback here. Maybe it'll be earnings related. Maybe these companies come out with good reports, but they run up so much into them, they fade back.
Yeah, you know what's going to happen the minute that happens?
People will buy them.
That's right.
No.
That's right.
I understand because the world won't be coming to an end. I'm just
right. So any kind of pullback probably going to get bought up either way for earnings. I'm very bullish for this earnings season because of that. Even if there's sell-offs, people jump in. Oh my gosh, I can't miss out. So for the most part, story here is, we're going into earnings. Right. Let me get the other charts on there. We're going into earnings. Keep in mind the dollar is falling apart here. Okay, the dollar is let's share this one. Dollar's falling apart. And it's back to 100 right now, but the dollar is starting to collapse here. That's going to boost asset prices if that continuation happens. So we'll keep our eye on that. If it retraces back up, we're a little less bullish. Bond yields are coming down. The cost of capital is coming down. Bonds are starting to bid up regardless, right? And those bond yields are basically going to yield you more interest than inflation is going to take from you at this point at a 3% inflation rate. Oil's a little hot, so there could be some inflation stickiness if oil keeps rolling up. So we'll see. We'll keep our eye on that. Like you said, the VIX is at very, very low lows. The volatility of the VIX continues to trend lower. It's all about earnings season though. It's all about earnings season. So we're going to keep our eye on that. IWM small caps are picking up at the top of the range. So this does look like a bear setup where we go back lower, or we could just blow off top. So again, there is no clear trajectory here because of the market is setting up so well with inflation coming down and people have FOMO. A lot of people are underweight stock. So if this is the bottom of earnings, I think that's it. I think we get that wave 2 FOMO continuation to happen, and we're seeing it here. We're seeing it here on the Qs, NDX, NASDAQ 100, right back to the top of that range. If it does pull back, we stay in the upside trend. All right. Other than that, I will catch you guys tomorrow. I'm going to end the stream now. I will see you guys tomorrow. We have Tesla earnings, so we will talk about in the morning the setup for streaming the Tesla earnings. And yeah, other than that, appreciate you guys today on the stream. I'm looking at Zoom. Like I said, I'm looking at Zoom right now. Nice bounce at the bottom of that range. AMD, Teladoc. We'll also check Teladoc tomorrow. But yeah, I'll catch you guys later. Appreciate you guys showing up for the stream. Camera went out again, so sorry for the side view. But we will be on tomorrow morning again. This time, hey, remember, we're going to switch the time. I'm going to switch it forward a little bit. 7, we're going to do 10:30 Eastern, right? So 10:30 Eastern time. Plan on that. We'll go 10:30 till whatever, and we'll talk about the Tesla earnings when we actually stream that. And then we'll go over the macro stuff that we should be coming in. Housing starts. Where's the housing market at as the economy starting to recover? As the economy recovering. All right. Catch you guys later. Appreciate you guys. Stay blessed today. Stay blessed. Eat good. Get your exercise. Sleep well. Stay blessed no matter what. All right.